Welcome to Sustainability Bridges, a Eurosif podcast that aims to build bridges between policymakers, investors, academics and civil society around the theme of sustainable investment. Eurosif, the European Sustainable Investment Forum, is the leading pan-European association promoting sustainable finance and investment at the European level. In these podcasts, Eurosif's Executive Director invites distinguished guests for a 30-minute conversation on current events shaping the sustainable investment community.
Hello everyone, my name is Aleksandra Palinska and I am the Executive Director of Eurosif, the European Sustainable Investment Forum. For this episode of Sustainability Bridges, I'm honored to be joined by Mrs. Helena Viñes Fiestas, Chair of the European Platform on Sustainable Finance, Co-Chair of the Taskforce on Net Zero Policy and Commissioner of the Spanish Financial Market Authority. Helena was previously Global Head of Sustainability at BNP Paribas Asset Management and a member of the EU Technical Expert Group on Sustainable Finance and the UN Secretary-General High-Level Expert Group on Net Zero Pledges. Together, we are going to discuss the EU Taxonomy, in particular its implementation, usability and data, as well as the latest and future work of the EU Platform on Sustainable Finance. Dear Helena, thank you for joining us today.
Good morning, Aleksandra, and it's a real pleasure to be with you and all our audience today.
First of all, for our listeners who may be unfamiliar with that topic, could you briefly tell us about the EU Platform on Sustainable Finance, its mission, composition, and remit?
Absolutely. The EU Platform on Sustainable Finance was actually set out by Article 20 of the Taxonomy regulation. It's a stakeholder advisory group to the European Commission on the development and implementation of the taxonomy and the wider sustainable finance framework. The composition is 35 members and 14 observers. Each one of the members is accompanied by a Sherpa. So that makes it much bigger. If you think about it, it's around 100. And the platform, also worth noting that it works closely with the European Commission, not only with DG FISMA, but also with DG Climate, DG Environment, DG Grow, and so forth. The platform has a 2-year mandate. This is its second mandate. And for each term, the Commission provides to the platform like a list of duties, if you wish. Yeah, that's under the mandate. And you can find our current mandate in the European Commission site. We have our own mini site. And this platform, I would say, it has probably 3 big deliverables. The first one is around usability and data. Yeah, so we are to make recommendations to the Commission on how to improve the usability of the taxonomy, how to maximize its goals, and how to make sure that different players can implement it in their day-to-day operations. The second task is on developing technical screening criteria for the taxonomy. We advise on it, so we make our recommendations. We develop technical criteria to expand the taxonomy to other activities that are not yet included from all 6 environmental objectives perspective. In this mandate, during this mandate, we have to review the Climate Delegated Act. I recall everyone that the taxonomy regulation envisions the review, which is not the same as revise, the review of the technical screening criteria, in particular of thresholds linked and the criteria linked to transitional activities. So we're going to do that. And last but not least, and this is a truly new piece of work or task for the platform, is we are to monitor capital flows to sustainable investment. So what it means in practice is that we have developed a methodology that we presented not long ago, like a few weeks ago, on how that could be done. We're now going, and we call that like an interim report, because we are going to perfection or fine-tune the methodology in the next few months, and we're going to do a first pilot project, right? concentrated on a couple of sectors and a couple of areas. We will also make recommendations to the Commission on how to take forward that piece of work.
Great. Thank you very much. That's a very helpful overview. Maybe just also going a little bit back in time to the predecessor of the platform, meaning the technical expert group. I think that's also very helpful, in this current stage where, a lot has happened on EU sustainable finance. And you were actually, within this very first group as a member as well, contributing very actively. Could you maybe just recall what this group did at the time and how it influenced what we have seen on EU sustainable finance?
Sure. The technical expert group, the TEC, as we call it, had 4 tasks. The first one was to develop a proposal for the EU global bond standard that we've seen now officially being adopted. We also made a proposal on climate benchmarks and on the climate transition benchmark and the Paris-aligned benchmark. It might be worth stating that so far, the funds that replicate the climate transition benchmark or the Paris-aligned benchmark have reached a total of more than 120 billion of assets. So I think it is one of the biggest successes. Of course, the EU Green Bond Standard has just entered into force, so we shall see how it's picked up by the market. Then the third one was the guidelines on climate-related disclosures. I recall everyone that the task we were asked to do was to integrate the TCFD into the NFRD, skeleton or structure, and that was then adopted, of course, with some modifications by the Commission, and were the guidelines on financial related, climate disclosures, and today are integrated in the ESRS. And then last but not least, I would say probably the most important one was the taxonomy. And I was in the group of the taxonomy, so we contributed to all the 4 works, but I was concentrating on the taxonomy. And what our group did was to develop the technical screening criteria for the climate taxonomy, and it sets up the structure, the vision of the taxonomy. And it might be worth recalling everyone, Aleksandra, if I may, that a little bit, because sometimes we forget about what was the thinking behind, right? So when we developed the climate mitigation taxonomy, the thinking was, let's imagine that European economy by 2050, I should say, actually, it reflects better the 2040, and you will see in a minute why. And we thought, okay, what are the different economic activities today in respect to that, and how they should look like close to with the knowledge that we have today. And we realized that there were 3 different types of economic activities. On one hand, those that they are close to net zero, and that's why I say close, they're closer to the 2040 90% emission reductions, if you think about it, right? Like, for example, wind energy. Then we have those activities that we would say encompass the technologies, products, and services that help the rest of the economy, that help the society to transition. So think about low carbon technologies, think about particularly the products that they are a part of the value chain, like wind turbines to wind energy. And then, which is a very important concept, the transitional activities. Many times the taxonomy is being accused, with inverted commas, of not incorporating the transition. And I would argue that's not true. That doesn't mean that there's not a transition finance outside of the taxonomy, but it really means the taxonomy already includes transitional activities. And those activities are those activities that they are absolutely essential for the economy, that they do not have a lower carbon replacement, and that they need to transition. And for those, the problem we face is that there's no viable, economically or technological viable solution today to reach net zero. So where you have the taxonomy expresses the best performance, on that 5 to 50% performance and technology available today that reaches, the farthest closer to net zero. But we need to be aware that it's far from being, net zero. And that's why the regulation demands that those activities, the criteria of those activities needs to be reviewed every 3 years to reflect the progress made in technology or the market. Yeah. And I think those are the ones that we should concentrate a lot of. I mean, not to say not that the rest they're not important, but I think that the transitional activities are the ones that really pose a question mark on whether or not we're going to be able to reach the net zero. So they play a really important role.
This is super interesting. Thank you so much and for sharing these insights and explaining it so well. Maybe as long as we are still not talking about the development of the EU taxonomy, could you maybe share what do you think should happen next? I mean, you did mention that, well, the criteria also for the climate adaptation and mitigation eventually should be revised. But in general, what do you think we need next? I mean, also to go slightly back, I mean, 2 years ago, the Platform on Sustainable Finance also put forward a report with recommendations for the future development of the EU taxonomy, including, I would say right now we have basically the environmentally sustainable economic activities fleshed out. But what about, further completing the framework, for instance, by also clearly fleshing out the significant harm activities and maybe differentiating between those that can be transitioned and those for which there is no current viable option. Also, no significant impact, and then the amber. Do you think this is something that would be useful to do? Also, in the context of maybe giving companies a tool to set their pathways towards net zero, and maybe setting aside a separate question, is it politically viable?
Well, there are loads of questions within your one question. Let me start by saying that I think I think there are two number one priorities, which are, the first one is to complete the green taxonomy. We know that there are many economic activities that have not yet been included because there is, as much work that we can take on board. And that is very important because we need to make sure that all the economic activities that can significantly contribute are reflected. That would help us distinguish then which other economic activities, and then that will leave us with two other type of economic activities, the ones that neither significantly contribute, but they don't significantly harm, right? And these are a very interesting type of economic activities. Think about, for example, marketing, right? Marketing per se doesn't have an environmental impact. It's more the company that conducts, that is specialized in marketing. They might have an environmental footprint through their day-to-day business, right? Like, I don't know, their installations, right? Where their offices, their traveling, right? And so forth. But if you think about it, their footprint is linked to other economic activities. And therefore, even if you're a marketing company, you can still use the taxonomy from an expenditure perspective to reduce, to reach to net zero. But it's not inherent or embedded in the actual activity. And then there are the ones that you mentioned, which is very interesting. Are they always significant harmful activities? If you think about what I was saying before, that as transitional activities, one of the conditions, and that is, is stipulated within the regulation, is that there's no lower carbon replacement. So if you have a replacement, then you're not part of that, and you still have a significant impact, then you are what is called always significant harmful. Let's think about coal power generation. You have other economic activities like power generation from wind energy that they are in the taxonomy. So your transition is about transforming, eliminating the actual activity and moving into another activity, if I may say, right? Personally, I always said that the advantage of identifying the always significant harmful activities is twofold. On one hand, it would help, developing, identifying what are the stranded assets within a company, but also in portfolios. And it would help that gradual phasing out of that. It would, it is a great risk management. It could be a great risk management tool. At the same time, it can allow rewarding companies that they are decommissioning those activities and they're making the effort. So I do think that the always significant harmful activities taxonomy or identifying those could bring some advantages. Yeah. Yet I do insist the priority is to expand the taxonomy and to make it work, which was the second priority, which is to make it work. And to make it work, meaning that not to say that it's not already working on the ground, but I think that we now have gathered a lot of knowledge on how it works in the different cases and how it needs to be adjusted to the different users and the different users. That's particularly true when it comes to the do no significant harm criteria. So it's not the same to ensure that do no significant harm related to, for example, biodiversity is respected when you're constructing a new building, as opposed to, assessing whether or not it has been respected when providing a mortgage. The difference says between the application of many of the do no significant harm criteria, it depends on the criteria, it depends on the economic activity when in relation to the stock versus, the flow or the new investments, revenues and capex, and whether you are the company conducting the activity or you are a financial market participant and assessing whether or not it has been respected. And I think that we reach that level of knowledge now that we can adjust, right, the compliance depending on the case to make it much more usable and easier to implement.
This is super helpful. Yeah.
No, I was just wondering if I had missed any, because there were so many sub-questions in your questions, and I was just wondering if I had missed any of the points, any of the questions.
Well, I was also asking about the political viability of, maybe extending in the future the EU taxonomy to also include the significantly harmful economic activities. But there is also another question I would be very keen to ask, which is about social activities.
So on the social activities, look, it's a little bit, I guess, same question, the same answer to both. So I think that I would personally very much like to see one day a social taxonomy. I think the platform has been very clear about its position on that. At the same time, I fully agree with the Commission that it's not the right time because as you are conscious, there are some concerns about the application of the green taxonomy, the extent to which it's usable, whether or not it is it means that it's quite of a burden for companies and financial market participants. So I think that it is wise to really make it work, to finish this one, to make it work, pick up on all the lessons on the taxonomy, lessons on how to make it, as I was saying, do no significant harm more workable, how to adjust it to different users. So for example, we're working now on a simplified approach for SMEs, right? So all these lessons are really important and will be the base in the future, I hope, to develop a social taxonomy that can be, from day one, much more implementable. This is not to say, and I really want to highlight that the taxonomy does not work on the ground. It's just the opposite. We've seen the first year reports from the largest listed companies, and they're much better than we expected, and we can talk about that in a minute. It is to say that it is more, adaptable and adjusted to the different users. So let's make this one work, and then let's move to the social taxonomy next. I think also that to make sustainable investment the famous or infamous Article 217 of SFDR. Yeah. Our view, and the platform was quite clear, is that in the future, once the taxonomy is finished, we should have one concept of sustainable investment, and that should be based on, when it comes to activity based, to the taxonomy. And hopefully one day we will have a green taxonomy and a social taxonomy, and that would be a sustainable investment.
Excellent. Let's keep the fingers crossed for it. And indeed, now maybe if you could tell the listeners a little bit about the latest data that you managed to obtain on the application and the implementation of the EU taxonomy, and also about the compendium of market practices that has been recently published, and what are kind of the main takeaways?
Thank you. It was very interesting when we started this second mandate of the platform, because I would say that we were a little bit at a crossroads, right? When on one hand, we still hadn't finished, truly finished the regulatory package, which is now, I would say, grossly speaking, finished at level 1. And at the same time, you started implementing, some of the different pieces of what I call this big jigsaw, that is the sustainable finance framework. So we thought it was the right time to start taking a close look to what was happening on the ground and making a first assessment from the ground, even if what is being implemented is only a small part of the sustainable finance framework, and being aware that when it comes to the taxonomy, we were only going to be able to analyze the implementation of the climate taxonomy, not for the other environmental objectives, and only for 1,700 listed companies, but the largest companies. So what we did is we examined 7 different stakeholders, with corporates and financial market participants, of course, at the very core, and then see, what were the results in terms of what was the assessment on how they were implementing not only the taxonomy, the other pieces that could be implemented, on how they were already start thinking about them beyond regulation. Yeah, and I think the results, and the report is available on the Commission site, are much more encouraging than even that many expected, right? So on the taxonomy, look, the revenues alignment and CapEx alignment figures are much higher than expected. When it comes, and the CapEx is higher than the revenues, and in many cases higher even of the eligibility in the revenues perspective, which basically is what it means is that companies are investing in either expanding the green activities or in transforming their business model. When you look, I think the average is around almost 20% of CapEx alignment. That is quite big for the first year of implementation. When you look by sectors, it's in the high impact sectors that the figures are higher. I mean, 69% on the utilities is huge, right? On the real estate, in the automobile sector, they're also quite high. So very encouraging. What we also realize is that companies are starting to use the taxonomy to set up targets, right? So when they cannot align straight away, or on the CapEx, they think they need more than those 5 years, or a first investment plan, they're already setting targets for the future. And they're starting to see how critical CapEx and CapEx plans are as part of the financial planning, which is the very core of a transition plan. Yeah. So really encouraging in that aspect. We calculate, and this is actually Goldman Sachs has this very interesting report on the first year taxonomy alignment figures, and they calculated that over 600 companies which combine market value of more than 6.5 trillion euros have invested 166 billion euros in in sectors like mitigation, climate mitigation, power generation, transport, and so forth, aligned with the taxonomy. So, and that is the real purpose of the taxonomy, which is to redirect investments towards sustainable investments aligned with the taxonomy. So the taxonomy, we could say, is working on the ground. Does that mean that there are not challenges? Of course there are. And the compendium of market practices not only identify what's working, but equally what is not working, yeah? And we identified 7 key issues that, and actually on our exchanges with the industry, clearly those were the key issues that concerned, that the industry, both financial and non-financial, consider as the main barriers, yeah, to exceed, to progress. And we took really good note, and we readjusted our priorities according to those. Yeah, some of them we already knew. It just, like reinforced sometimes what we thought. In other times, it really made us think that it was a bigger problem than we thought, right? And do no significant harm, for example, came as the number 1. And you were working now on, simplifying to no significant harm, or making it more workable as we review the climate delegated acts.
This is really great. Could you maybe share a little bit more insights in addition to the significant harm or significant harm criteria? Yeah, what were the other areas of the concern?
Of course. Let me share a couple of more, and then you let me know if you want me to give you the full list, yeah? But for example, on the KPIs of the taxonomy, as we were talking about the taxonomy, there was OPEX, the difficulties on OPEX, right, that have been identified when companies, trying to identify which flows of revenue, of expenditures can be linked to specific criteria. Sometimes the problem is on the definition of the activity per se, right? That it might need clarification. So we took also good note of that. Sometimes is on separating certain type of expenditures, which part you can actually, link to the activity, which part not. So that's one. The other one is on the GAR, the green asset ratio for banks. We're also working on simplifying the green asset ratio and making it more workable, but also that it's more meaningful, right? That the green asset ratio actually reflects the percentage of exposure and actually application of the taxonomy. Because the denominator of the green asset ratio includes all the assets, all the different assets of the balance sheet, but only a few can be included in the numerator. That makes it that the figures that are being published this year are really, really low, but also you need to understand, the green asset ratio in order to judge it, to assess it. So that is one concern of banks. I think that is a fair concern, because you need to understand, in fact, you should have you should have 2 figures, one with all the balance sheet, so you realize what is that exposure, and then you should have one that is what is potentially eligible, and then what is actually aligned, yeah, to have a fair assessment. So that's another example. Then let me give you a truly different example, or an example that is not usually discussed, which is, until now, we've been very much concentrating on data. When we concentrate on the problems of data, it's on the data coming from corporates or financial institutions, right? And that has somehow monopolized the data discussion, yeah? But now we're going to very soon have the data of more than 50,000 companies across Europe, not only in taxonomy, but on a whole wide range of environmental, social, and governance issues, thanks to the ESRS. So all the data that investors can use, yeah? But there would still be 2 pending issues related to data. The first one is on estimates, what happens with data for non-EU companies, for example, right? So on that, the Commission last June, and actually responding to one of the key issues that the platform has been advocating for, confirmed that investors could use estimates for taxonomy alignment. And we hope that that is going to really help, financial market participants start using the taxonomy when constructing their portfolios, both from a revenue and capex perspective. So what we're working on, because in estimates, it's so important that at the same time they are reliable, right? Because, they're estimates and estimates. So we're working on a framework and a set of principles and some guidance on how estimates should be conducted. So at the same time, they give that reliability to investors. Yeah. So that's one. Secondly, and of course, when reporting taxonomy alignment at funds, we believe that it should be clear which part has been estimated and which methodology has been used and which part not. So you're also very transparent about it. So, but the other issue is even more interesting, is that when you look at the application of the taxonomy, particularly of certain activities, you need, whether you're a company or a financial market participant, you need information on biodiversity, sometimes on pollution, adaptation, that it is not the company or the financial market participants to develop. It's actually information that local authorities or different types of authorities may have. Think about adaptation, for example, right? If you are buying, a terrain, you want to construct a building, or an installation, you might want to know what is the risk assessment. So that information is available somewhere, spread around Europe, and what we're looking at now is is that how can we ensure not only that there's centralized data and harmonized across Europe on those, particularly around biodiversity, pollution, and adaptation, but also how to give access to financial market participants, financial institutions, and companies to use it. So, for example, when a bank will give a mortgage, instead of asking the client, they could access whether or not there's been done a risk assessment, whether or not there's exposure to, like risk flooding, flood exposure to floods or the risk of floods, and then whether or not, they have been adaptation measures being implemented. And for that, we are conducting a pilot project with the European Environmental Agency on how that could look like. This is a small pilot project that we're studying, but that should be the base for a proper recommendation on how to, then scale it up, and ensure that financial institutions across Europe have access to that information.
This is all really fascinating. And, it's really great to see the taxonomy taking off the ground and being really implemented, and that the figures are, better than even expected. This is really great stuff. I know that you are also doing some work on the application or simplified taxonomy for SMEs. For the SMEs to be able to use it as a kind of a helpful tool, also whenever they seek financing from banks. Could you maybe tell us a little bit about that?
Absolutely. So we're working hand in hand with the Commission on this, and what we call simplified approaches, right? And they are like threefold, right? Or there are three parts of the work of the simplified approaches. The first one is very much focused on listed SMEs. Recall everyone that listed SMEs have an obligation to report against the taxonomy. It's not, I think it is in a couple of years that they will have to start reporting against the taxonomy. So for listed SMEs, the idea is to really support them, provide them with the right tools so they can implement the taxonomy, but also looking at how it might, we might simplify some criteria and the compliance for them, including, potentially looking at the reporting, so it is fit for purpose. It is, we apply the principle of proportionality. So that's one. And of course, any SME could benefit from that they wish. In fact, we have had a few SMEs voluntarily already reporting against the taxonomy. Then the second approach is what we call the checker, right? And that one is for non-listed SMEs, of course, fully voluntary, but it is focused on what are the key environmental impacts that those SMEs might wish to address, that at the same time might be likely to be the areas in which they receive more questions, particularly from the large companies as being part of the value chain. Let me explain you. So a little bit the concept is, tell me what your main activity is, and I will tell you what are your key environmental impacts. And in order to address that, we will attach, if you wish, to each one of those environmental impacts the key metric with the threshold that is linked to that environmental impact. Let me give you an example. Imagine it's an activity A that it's in the taxonomy. So we will use the taxonomy as the reference in a way and say, okay, that activity contributes to mitigation and pollution, for example, yeah? And then instead of having all the technical criteria, the taxonomy, we will extract and say, this is the key metric for mitigation, right? And this is for pollution, so that the company, the SME, can concentrate on those two metrics. Those two metrics would also be, as I said, the most likely metrics that the large companies, as being part of the value chains, will ask them. So the idea is to really have SMEs concentrating on the most impactful of the areas, yeah, and also contribute to the achievement of the EU environmental goals. But if what happens when the activity is not eligible from the taxonomy, so what we're working on, it's on the development of 2 or 3 environmental indicators using the EFRAG's voluntary SMEs ESRS standard, not to, create new burdens. And then what we'll do is reflect what green performance, or transition performance might look like when it comes to those indicators. Now, both, whether the activity is eligible or not eligible, so those indicators should be the base in the future for sustainable, whether green or transition loans, right? Finance. So that the goal is also to really facilitate the access to sustainable finance for SMEs so they can also invest in their transitions. And I forgot one last, sorry, I said it was third. Sorry, I just recall. Then the third sort of area of work or approach is based on green investments. What we realized is that the majority of SMEs the majority, I think it was 58% that the Commission had identified of the SMEs that have done a green investment, yeah? And those green investments tend to be around, renovation of their offices, the buying of a solar panel, and like these type of measures, individual measures. So on that front, we're also going to identify like a key indicator for each one, or like the key criteria, so they can also benefit, from green loans in that respect. And we are going to look at which activities tend to be conducted by SMEs that might not be yet reflected in the taxonomy.
That is indeed very interesting. In terms of maybe monitoring the capital flows, I mean, you did mention also that you have already developed a draft methodology for that purpose. Also, just could you tell us a little bit more in terms of, what are the plans for that? And, the platform of sustainable finance, in terms of your composition, you have still relatively limited, I would say, team and means. Are you planning to engage another institution also for this exercise? And what is the time frame?
Yes, very good question on the research. It ought to be said that the work on monitoring capital flows, and when you look at the annex where it lists everyone who's been involved, it's been closely work very closely with the European Central Bank, the European Investment Bank, the ESAs, Eurostat, and a joint research center within the European Commission. So you're absolutely right. It's a small group, but we have really benefited. All these organizations, institutions are part of the platform, but we have benefited from the work of individuals from these organizations that are actually very notable in this area. So that's been a plus for the platform. Now, I was talking before about, we thought that as we move into this implementation phase, we thought it will be a very good time to look how, what's happening on the ground, right? And make a first assessment. Well, the monitoring of capital flows, it's the other assessment that needs to be done, but this time it's more macro, right? So it is from top down. Let's start seeing to what extent the actual sustainable finance framework is being successful to, redirect capital flows to sustainable investment. So that's the purpose. And the purpose, it was to develop the technology first. Then we're going to do a pilot project, and then, the full exercise should be undertaken. Now, this platform is not going to do the full exercise. What we're going to do is fine-tune the methodology and do a pilot project. But on that final report that we're going to publish in relation to monitoring of capital flows, we would also make our proposal on how this very important piece of work should be taken forward. Where should it be? Who should host the database, or which organizations might have to be involved and so forth. So that's still work in progress. And of course, we'll do it in collaboration with the Commission. Now, the monitoring of capital flows, if I may, I think there were a couple of really interesting learnings. The first one is that the same as the compendium, it helps to see which parts of the sustainable finance framework might need a little bit of polishing, right? So we were talking before about do no significant harm. What we have today, companies disclose in their taxonomy reporting, do not disclose whether or not they're meeting do no significant harm, for example, And I think it is wrongly perceived as negative if they were to say yes or no, right? I mean, they do need to conduct the assessment. The work has been done, but it's perceived as negative. I would argue it's just the opposite, because if companies were disclosing that from a voluntary perspective, for example, then they could be rewarded for those investments that meet substantial contribution, but might not meet one or two criteria of do no significant harm. But at the same time, when monitoring capital flows, we could have a better picture of all those flows that might not meet one or two criteria of do no significant harm, but they are meeting substantial contribution, or the opposite, they are meeting do no significant harm, but not substantial contribution. So they are basically what in a previous report that you alluded to are the amber, right? So I think that if, that was one of the lessons, we could reflect much more transition finance if, for example, we had that information. The other thing that it came very clearly is that CapEx is the base of the monitoring of capital flows in the real economy. So once again, I think CapEx is becoming, and you heard me saying that before for a long time, CapEx is probably one of the biggest contributions of the sustainable finance framework. And we need to recall everyone that it is the most valued indicator for investors, because it tells you what is the direction of travel of a company, but also is what it gives teeth to any, transition plan or any positioning, because it's basically what commonly we say, put your money where your mouth is, right? So the CapEx that is being invested, and that CapEx plan is what is really telling me that a company is walking the talk. Did I miss anything on the monitoring? Oh, the last point I want to make on monitoring capital flows is that what it really will help us all is not only to see whether or not the sustainable finance framework is actually working and what is not working, but it's going to provide us real information at economic activity level. And we're going to be able to see which economic activities are underinvested or are being invested in through which vehicles, right? Financial vehicles. Think about the incredible contribution that information can make in Europe. What we know now is the Commission is now working on sectoral pathways and technology pathways, right? If we have that level of monitoring of capital flows that is telling us what exactly, where the money is going, at that level of with the breakdown of economic activity and on financial investors, we could really refine the investment gaps per economic activity. And that could be an incredible tool to fine-tune policy making. And it's incredibly contribution to, transition. Let me give you an analogy, and I'll finish with this. It's almost like personalized medicine. Until now, we had one pill for everyone, irrespectively of your size, your age, your medical conditions. But now, thanks to personalized medicine, right? It is one medicine, right? But particularly biotech, really adjusted to yourself, your medical profile, and so forth. Yeah. So it's a little bit the same. We will be able to really fine-tune policy, think about potential incentives, yeah, to those areas and identify the bottlenecks that are most needed.
This is excellent. Thank you so much, Helena. Maybe just to conclude, could you tell us a little bit about what are the platform on sustainable finance and also your personal recommendations for, the future of the EU sustainable finance framework? I mean, we talked today a lot about the EU taxonomy, so I think this is clear, but I know that the platform has been also looking a little bit more holistically at the EU sustainable finance regulatory framework. And I think overall, everybody agrees that a lot has been done. Now it's time, to kind of pause, reflect, look at, what is working well, where are the gaps, where are some issues to be tweaked. What do you think we need next? Also, do you think we need a proper reform of the sustainable finance disclosure regulation? Do you think we need ESG benchmarks? I mean, what do you think we need next?
So I think that, as I mentioned, we are moving into full implementation phase. I think the key building blocks of, the pieces of the jigsaw have been finished. So I would say that we don't need changes in terms of the actual regulations, what is called the level 1. We need to focus on the level 2 and level 3. That is the technical criteria, the RTSs, the details, and we need to fine tune them and do so in parallel, as we reflect from what's happening on the ground. So, for example, we'd already talked about the SFDR, but if we think about, about the taxonomy, but we think about SFDR, I think what we need now is to fine tune some of the concepts. We were talking about sustainable investment, for example. Also, what we know that is been a problem or a concern is that the Article 6, 8, and 9 of the SFDR were not meant to be categories of funds. They were meant just to be how you register, how you register your fund, and that, if it is registered under, as an Article 8, that would tell you which disclosures, you need to comply with, right? We know that there is a demand on creating some sort of categorization, right? So this is, from my perspective, it's about perfectioning, slightly modifying, the different pieces, yeah, and particularly also about providing the right tools for the implementation. And again, now adjusting to all the different cases and specificities that we are, identifying on the ground. I would say SFDR is probably going to be a priority, right? I think that that's clear. I think that First of all, just because now we have the ESRS, now we have all the different pieces. So there is one part of that sort of review that needs to happen simply because the different pieces of the jigsaw were developed and negotiated separately, even if they were part of one vision. Yeah. And now we need to make sure that they are consistent. Yeah. And then we can simplify. So that's one. Secondly, on SFDR, I would say that the key issue we need to look at is the link with the ESG preferences. Sometimes we forget that, or at least we haven't appreciated enough what an inflection point and what a breakthrough was the inclusion of sustainability in sustainability preferences. Yeah, I think that gave the opportunity to the average European, citizens to align their values, their investments with their values and to contribute to the transition. But what is clear is that it's far too complicated as it is right now, that not even the advisors, the financial advisors can really explain the options, right? So now we need to work and readjust SFDR so that thinking how we can make ESG preferences work. So for me, those two need to go hand in hand.
Great. Thank you so much, Helena. On that positive note, once again, thanking you very much for all your dedication and work that you're putting to this.
Thank you.
Let's just indeed keep the fingers crossed that everything progresses smoothly. And once again, many thanks for your insights, all your great work, and hope to stay in touch.
Thank you so much. It's been a pleasure.